Hey, what's up guys, John here. Imagine a world where car insurance is $500 per month. It might sound far-fetched.
Auto premiums are rising higher than inflation.
Auto insurance rates are rising.
The average cost of full coverage is now over $2,000 a year nationwide. That's up nearly 14% from last year.
But look at Philadelphia. Philadelphia's car insurance has jumped 154% this year to now $4,753 per year. So what does that mean? It's about $400 a month to insure your car in Philadelphia. Now, when you start to look at what's happening right now all throughout California, San Diego, for example, just a few weeks ago was an absolute disaster. Many billions of dollars in property damage, both homes, cars, and commercial property destroyed. Look at what's happening right now in Los Angeles, whether it be in downtown LA, all the way up to the Hollywood Hills, and San Francisco, everywhere in between. Billions and billions and billions of dollars in damage, all held by a lot of insurance companies. And what are they going to do? They're going to push these losses off to the general public on car insurance, on home insurance, on business insurance, on all different insurance policies. So when you start to really look at what's going on here, you're going to see a really big problem is coming for the auto market and for America. I'm going to break this down for you. I'm going to show you the facts, show you exactly what's going on. Please hit the like button. When you hit the like button, YouTube will share the content, educate more people about what's happening in America's economy, and if you'd like to fix your credit to position yourself, what I believe is going to be a once-in-a-lifetime opportunity to buy a car, to invest in real estate, and really to scale up, because a lot of people are going to be extremely leveraged. They're not going to be able to take on all of these new costs and expenses that are about to hit. So if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. For more information, you can click the link in the description just below this video. Schedule a free call for tomorrow. Take a look at this. So Philly has the largest jump in average cost of car insurance, 2024, $4,753. This came out a couple hours ago, today, right? A couple hours ago. Then you look at DC. DC, now they are also increasing their car insurance premiums. They're increasing premiums due to theft, right? When did this come out? Today, right? You start to really kind of connect these dots. Car insurance rates jumped 26% across America in 2024. This is before all of the disasters that have happened over the last 30 days. And you just start to follow these trends. Car insurance rates have soared 43% since 2022. So, a year and a half, right? And are expected to continue to climb. Here's how to lower your premiums. Detroit, for example, the average car insurance now is $5,687 for full coverage. Think about that, almost $500 every single month on just car insurance. That used to be a car payment just a few years ago. You have to ask yourself, how many Americans can really sit there and afford food, afford rent, afford their car insurance, their car payment, afford everything? They can't. Americans are being pushed off the cliff. And what I think is going to happen is we're going to start to see defaults in this country to the likes of which we've never before seen. Look at some of these cities. Detroit, $5,687. Philly, $4,753. Miami, $4,200. Tampa, $4,000. Vegas, $3,600. And the cheapest cities, Seattle, Portland, Minneapolis, Boston, and Washington, D.C. Washington, D.C., this is the cheapest at basically $200 a month, right? So when you start to really kind of add all this stuff up, and then you look at what's happening, you can really see that we're walking into an insurance crisis in this country. So already in California, 1.1 million people are without power. 1.1 million. 3 dead as storm pummels California, causing flooding and dozens of mudslides all throughout California. And you start to look at this, you can get an idea of exactly what is to come. And look, I'm not being dramatic. Look at this. I'll show you some of these images that have come out inside of, we'll just put it the last week. And you start to look at this. All of these losses, most of which are going to be pushed onto insurance companies. And people that don't have the right coverage, they're going to start trying to hire attorneys. They're going to start trying to sue these insurance companies. Some of them will win, some of them will lose. Most of them will probably settle. And you start to look at a lot of this. It's just going to be a real disaster for car insurance, for home insurance, for all of us. Because these insurance companies, they don't lose money, they make money. So regardless of any type of disaster, they lose $1, they're going to find a way to make 3, right? And that's what's happening right now. Now look at the actual real numbers. So if you were to buy a new car in America, which many people did, $726 a month is the payment, $726 a month. Now let's just say on the low end, you bought a used car, $533 a month, right? So on the national average for insurance, which is $2,756, it's $229 per month. So if you add in a used car payment plus the insurance plus $50 a week for gas, which is $200 a month, plus about $600 a year for, repairs, oil changes, tires, whatever. I mean, this is on the low end, $50 a month, prorated. It's $1,000 per month, $1,000 per month. But if you live in Philly, if you live in Miami, if you live in any of these other areas, you're looking with a used car and almost no maintenance to that car, you're looking at $1,300, $1,400 a month. It's absolutely insane. And so when you start to add all this stuff up, what is it going to equate to? People turning their keys in. And that's what's happening right now. When you look at Google Trends, voluntary repossession is at an all-time high. It's the highest that it's ever been, dating all the way back to 2004, right? The highest it's ever been, dating all the way back to 2004. Now you have to ask yourself, when the average American has a loan on their car 125% loan to value, meaning if it's a $50,000 car, they have a $62,500 loan, and then car insurance skyrockets, and gas prices are going up, and maintenance costs are going up, and the car value is falling. How many people are going to want to pay on a car that they bought for $50,000 that's now worth $40,000, right? Or that's worth $38,000. They have a $62,000 loan on it. Not that many people. People are going to look out front and say, you know what? I'll never get my money out of this car. Forget it. I'm done. They go back to the dealer and they say, here, your problem now. That's what's happening right now in the minds of millions of Americans. They're looking at all of this problem, all these problems that are right on the horizon right now. And so you start to really look at what's going on with the labor market. You start to look at what's going on with small business. Chapter 11 business bankruptcy is up 72% in 2023. Business insolvencies shoot up more than 41% last year. This pandemic debt mounts. Business bankruptcy rise 80% in Metro Detroit. Chapter 11 bankruptcy filings 22% year over year in January. Subchapter, you start to look at this. What is this going to equate to? The biggest buying opportunity in American history. That's what it's going to equate to. That's why I think it makes so much sense when you start to look at what a lot of the smart money is doing. Mark Zuckerberg selling $500 million worth of Meta stock. You start to look at, Mark Benioff, the CEO of Salesforce, liquidating stock. Jeff Bezos planning on selling $8.8 billion worth of Amazon stock this year. His former wife, Mackenzie Scott, sold $10 billion in stock just recently. You start to look at all these billionaires, they're all liquidating. Why are they doing? They're sitting on a mountain of cash because they know that the U.S. economy is in a very, very, very weak place. And sitting on all that money, putting themselves in a position to go out there and buy is, makes the most sense. And so you might not be at that level, not many people are, but if you just have a little bit of knowledge, you have some cash, you have good credit, you're able to get yourself into a position where you can get funding, you're going to be able to go out there and make your dent in the world, even if it's in a small way. And I think a lot of people are positioning themselves for this. I think a lot of people are looking at the writing on the wall saying, you know what, there's just no way. Statistically, if people are making $50,000 a year, if they are making, just call it $4,000 a month, and their rent is $1,700, and their car payment is $1,200, they're already at $3,000. They're going to pay, how they're going to pay their car, how are they going to pay their student loans? How are they going to feed themselves? How are they going to keep utilities on? How are they going to pay any of these other expenses? They're not going to, right? That's point blank what's going to happen. They're not going to. When people lose their car, they lose their ability to go to work. They lose their ability to take their kids to school. They lose their ability to do a lot of different things. And so it's just the first domino. So what I think is going to happen is I think car insurance, home insurance, all of these things that many people just wrote off as a fixed cost are going to completely change at a moment in time where asset values are likely going to fall in a very, very, very big way. So I think we're walking into a massive opportunity to create tremendous wealth. And I think that real estate, I think that buying discounted vehicles in 2024, I think it's going to be everywhere. It's going to be the complete opposite of what we've seen in 2021, where people are spending 20, 30, 40% over sticker price and just they didn't really care about what the price was. They just wanted to get into a car. They had to have a car. I think the opposite is going to be true. How many people are going to want to go out there and buy a car right now, in 2024 at today's prices? Not as many as a couple years ago. So what I think is going to happen, I think dealers and lenders are going to be forced to unload all this inventory. And I think there's going to be a massive opportunity to pick up some cars. What do you think about this entire situation? Do you think we're walking into a insurance crisis when premiums really start to, tick up a notch? After all of this damage gets calculated, all of this gets fed to the insurance companies, they're going to take this information and they're going to do one thing: increase everybody's rates. That's what they're going to start to do. Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for this massive insurance rug pull that is definitely coming. It's already happened. It's already happening. When insurance is $4,753 in Philly, when it's, I mean, you start to look at these other numbers in DC and all these different markets, you start to see what's happening. You tell me how people hold on. I'll wait. Drop it in the comments. If you'd like to fix your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. You can click the link in the description just below this video. Schedule a free strategy session. If you have a repossession on your record, if you have late payments, medical bills, charge-offs, collections, any type of negative derogatory item on your credit report, book a free strategy session by clicking the link in the description just below this video, and I'll catch you in the next video.